Hi, I'm Steve Garrett. I'd like to talk to you a little bit about financial statements for nonprofits. Now, it doesn't really matter whether or not you're joining a new board of directors or you're just one of the staff people among the board of directors. The reality is that many of us have experience with financial statements, especially having accounting classes and businesses. But nonprofits have some unique things about how their financial statements are made, how the wording and the terminology that involves them. And that experience doesn't always translate from the profit world where we have a lot of experience to the nonprofit world where maybe we don't have as much experience. So I'd like to talk a little bit about how nonprofit financial statements are a little different and what you need to do to analyze them as a member of the board of directors or a person on a committee, staff person, somebody involved in managing the nonprofit. Let's start with what the nonprofit world calls the statement of financial position. Now, if it was a for-profit corporation, we'd call it a balance sheet. And it's really not all that different. In some ways it is, and we'll talk about how it's different, but it's essentially a picture in time of what the assets of the organization were at that particular point in time, both the assets and the liabilities, and those assets and those liabilities should equal. That's why they call it a balance sheet. But in a nonprofit world, we call it a statement of financial position. In a for-profit world, the next financial statement you might see would be the income statement. This shows the income, and it shows the expenses. Some people call it the profit and loss statement. But in a nonprofit world, it's called the statement of activities. And again, it's pretty much the same thing as you would have in a for-profit world, except some of those activities are activities that were generating income that is going to have a restriction of one type or another. And so those restrictions may be temporary restrictions. They may be permanent restrictions. In other words, you might do a fundraiser, and that fundraising activity might be to generate money for a specific project. And so the funds that are generated are restricted to be spent on that specific project. Once the project is complete, the restriction may be lifted. So a restriction could be permanent, or a restriction can be temporary. So the statement of activities is essentially the income statement, the profit and loss statement that an organization would have if it was a for-profit organization. Another financial statement for a nonprofit would be the statement of cash flows. Now, this is not necessarily income and expenses. It's more akin to what a for-profit organization would call the source and use of funds. See, some of these funds may not be from income or may not be spent on expenses. They might be from some other source of financing, the sale of assets, the borrowing of money, the repayment of loans, gifts. So the source and use of funds in a for-profit world becomes the statement of cash flows in a nonprofit. In the nonprofit world, you often have what we call the statement of functional expenses. Doesn't really break down into the profit world so much as it's kind of unique to the nonprofit world, where you may show various activities of the organization, the income from those activities, and the expenses, so that you can identify one activity of the organization for positive or negative cash flow. And negative cash flow is not necessarily a bad thing for an activity within a program. I know of a lot of not-for-profits that will run 5 or 6 activities during the year, and 1 or 2 of them will produce nice positive results, maybe fundraising results, and 3 or 4 of them might produce negative results, because profit is not always measured in dollars. Sometimes it's measured by the services provided, the benefit is provided to the community. I would make the comment, though, about the difference between a for-profit and not-for-profit corporation or organization. And, I hear people say, well, I want to work for a not-for-profit organization. I don't want to worry about trying to balance my balance sheet and trying to come out with more money at the end of the year than I started with. That's going to be a very short-lived assignment, because not-for-profit is a tax status, not a business plan. And organizations that don't pay attention to having profits, or in the not-for-profit world, what we call a positive cash flow, those organizations are going to go out of business. You have to find some way to fund your activities, either by fundraising or by programs that have positive cash flows. And nonprofit organizations are not exempt from the rules of economics and reality. The last part of financial statements that you need to pay attention to are what's called the notes. Interestingly, this is the part that people ignore the most, and it's the part that is the most important. I like to tell people all the really good stuff is hidden in the notes, and we'll talk about the notes and how you analyze financial statements. So there's some thoughts that I have. I'm going to talk a little bit more about these ideas about reading financial statements. I'll take each financial statement and talk about what you want to look at when you look at those statements, what you want to find, what kinds of things tell you whether or not your organization is in good shape or bad shape.